the distinction between an employee and an independent contractor is important because with the FLSA, which we're going to talk about in this chapter, that the protections of the FLSA, the Fair Labor Standards Act, only apply to employees. So it's important to know the difference between an employee and a contractor. It's important for those in the payroll department to know as well, because there are a lot more restrictions and requirements with regard to payment to employees than there is to independent contractors. And like I said, I think I mentioned last week, 99.5% of this class we're going to be talking about employees. But it's very easy to confuse these two classifications of workers, so it's important that we get the information in order to classify properly. Okay, so
employee versus independent contractor, a 21st century showdown. In today's ever-shifting economy, many job seekers are hesitant to ask too many questions during the interview process, as they don't want to risk losing an employment opportunity. However, job seekers may be doing themselves a disservice by not clarifying whether the position is an employee or independent contractor position. Whether the prospect will be considered an employee or independent contractor has numerous impacts on various important employment characteristics, such as wages, taxes and withholdings, fringe benefits, behavior and relationships, schedules, and record keeping. First, we need to define employee and independent contractor. Then we can examine the important differences between the classifications and the ramifications that incorrect classifications can have on both the employer and employee. Currently, the federal government has not established a comprehensive statutory scheme to distinguish between an employee and independent contractor. Instead, different agencies define the distinction for their own purposes. According to the United States Small Business Association, an employee is defined as someone who performs duties dictated or controlled by others, is given training for work to be done, and works for only one employer. The National Labor Relations Act defines the term employee broadly. Instead of limiting the term employee, it includes anyone not excluded. People excluded as employees include agricultural laborers, those in domestic service of any family or person at his home, those employed by his or her parents or spouses, and anyone with the status of an independent contractor. An independent contractor, on the other hand, is someone who operates under a business name or under his own name, may have his own employees, may maintain a separate business checking account, may advertise his business's services, invoices for work completed, has more than one client, has his own tools and sets his own hours, and keeps business records. The IRS defines a person as an independent contractor if the payer has the right to control or direct only the result of the work, and not what will be done and how it will be done. Some states have defined these terms and addressed the problematic overlap of definitions by providing guidance using a classification test. For example, in New Mexico, an individual is classified as an independent contractor if he meets all of the following standards. 1. He provides labor or services free from direction and control over the means and manner of providing the labor or services. 2. He obtains business registrations or licenses required by state law or local ordinance. 3. He provides labor or services and furnishes the tools or equipment necessary to provide the labor or services. 4. He retains the authority to hire and fire employees to perform the labor or services. 5. He receives payment for labor or services upon completion of the performance of specific portions of a project, or is made on the basis of a periodic retainer. And 6. He represents to the public that the labor or services are to be provided by an independently established business. Essentially, employees get paid for work under direct supervision of an employer, while independent contractors take on a job for a price, decide how the work will be done, and decide if it is necessary to hire others to help do the work. There are many practical differences between employing an employee and independent contractor. Taxes. The issue of withholding taxes is critical to this dichotomy. It is the responsibility of the employer to withhold an employee's federal and state income taxes. The employer is also required to pay the withheld taxes to the IRS and any applicable state agencies. People working as independent contractors, on the other hand, must pay their own income taxes, and the employers, in most cases, need not withhold the taxes. Social Security and unemployment. A second distinction between employees and independent contractors concerns Social Security and unemployment insurance. In most cases, employers are required to make payments into Social Security and unemployment insurance on behalf of employees. Independent contractors make their own contributions to Social Security. An employee also need not purchase unemployment insurance for independent contractors because the independent contractor is viewed as self-employed. Healthcare and retirement benefits. When employers offer certain retirement plans, those employers must make the retirement accounts available to all employees. Unlike employees, independent contractors are not due any sort of contribution toward a retirement plan or account. Other fringe benefits, such as healthcare coverage, vacation time, and sick leave, are similar to retirement plans. These benefits are available to employees under myriads of federal laws and regulations, but not to independent contractors. The current patchwork of laws across the United States makes it difficult for individuals and potential employers to differentiate between independent contractors and employees. Clarifying this confusion is important because of the harm mistakes may inflict on both workers and employers. Some of the harms that can be caused by incorrect classification include employees may lose employment benefits, such as health insurance, sick days, overtime, and retirement benefits if misclassified. Employees and prospective employees may lose protections afforded under occupational safety laws and anti-discrimination safeguards. Competing businesses and taxpayers may be forced to pay, for example, emergency medical costs or welfare for uninsured employees who, by right, should have been covered under employer health insurance plans or unemployment insurance. Misclassification also has legal punitive consequences for employers under both federal and state law. First, if an employer misclassified an individual as an independent contractor instead of employee, the employer may be required to reimburse the employee for wages that should have been paid under the Fair Labor Standards Act, including overtime and minimum wage. Second, an employer will have to pay back taxes and penalties for state and federal income tax withholding that should have been paid to the government. Third, an employer can be required to make Social Security and Medicare payments that should have been made. Fourth, the employer will have to provide the incorrectly classified individual with employee benefits, such as health insurance and retirement benefits. Finally, many states now impose criminal penalties, such as jail time and fines, upon a business that intentionally misclassifies an individual as an independent contractor. Although a job seeker may hesitate to do so, one issue that must be clarified in the hiring process is whether a prospective worker will become an employee or independent contractor. Once classified, it is extremely important to understand what that classification means in terms of pay, taxes, benefits, and scheduling. As technology continues to advance and more people are able to work on remote and per-project bases, more people find work that falls in the gray areas between employee and independent contractor work. As such, knowledge of this area and understanding its importance is more important than ever.
Okay. Whoops. Nope. All right, so let's take a look at some of these questions. I know that went through it pretty fast, but hopefully you were able to, maybe some of you take some notes while you were listening. So they talked about the fact that there are lots of job seekers are hesitant to ask about their employment classification during interviews. So if you're an interviewee and you're applying for a job, and obviously there's a power differential in that scenario. As the employee seeking employment, a lot of employees feel that they don't have the power in that situation, and they may be concerned about asking and clarifying why, which classification they have. So I guess I just answered that question. I didn't give you a chance. Did anybody else make a note on why job seekers are hesitant? Maybe I missed something when I.
Wouldn't you be able to figure
Well, yes and no. You should be able to, and it should be clear right from the start exactly what the position, how that position is to be classified. Which, by the way, it's not up to the employer to determine the classification. Classification is determined by the facts and circumstances. So if the facts and circumstances would indicate the position should be an employee position, the employer can't just say, call it a contractor position instead. They're not allowed to do that because the facts and circumstances state that it should be an employee position. And there is a lot of misclassification that goes on by employers, and a lot of employees or workers who really aren't knowledgeable enough or don't have the aren't confident enough to really address it with their employers because, again, of that power differential. Yes, Uber got themselves into trouble as well. There was a big lawsuit in California a few years ago about Uber. And as they talked about there in New Mexico has some set definitions. So states may have specific definitions of what an employee is versus a contractor. Yeah. They got, if I remember correctly, so they were classifying workers as contractors, but some of the workers sued and said, no, we're employees because of the facts and circumstances of our position. Now, I actually think that ultimately they were considered to be independent contractors, right? The workers lost in that case. But it did go to court, and there have been other cases as well where it's usually when it goes to court, it's because an employee thinks, or a worker, I will use those terms interchangeably, but I should say worker, because the worker believes that they should be classified in one way and the employer believes they should be classified in another way. Usually it's the worker thinks they should be an employee because there are more protections when you're an employee, whereas the employer thinks that they are an independent contractor. So that's where the tension comes between those two positions. They talked about in the video that different agencies have different definitions of what an employee is and what an independent contractor is. For our purposes, we're really most interested in the IRS's definition. And actually, the IRS does not have a specific definition. It goes back to the facts and circumstances of the case because each case is unique. But, and the question too, so how does the IRS define an independent contractor? Did anybody make note of what they said it pretty fast? So, right. So, and that is one of, they mentioned actually one of the factors, but what's important in that is the word control. So the IRS looks at who has control over various factors of the employment. So who has control over the schedule, the worker or the employer? Who has control over how the worker is paid, the worker or the employer? Who has control over where the work is performed or on what equipment the work is performed? But each of those comes back to control, and they're mainly under two categories, which we'll talk about a little bit more, but under economic control and behavioral control. So that control piece is very important. And we're going to look at, the IRS does have like a checklist for employers that they can use to try and determine appropriately how that worker should be classified. The IRS also offers employers, for a fee, the opportunity to pre-classify someone. So they can give the information to the IRS to say, these are the facts and circumstances. You tell us, IRS, are they an employee or are they an independent contractor? And that's to avoid any litigation in the future, right? Because it can be quite costly. So three key characteristics of an employee versus an independent contractor. Did you guys get any of those written down? I think they said more than 3, but generally speaking, 3 characteristics. So I may be getting wrong what they said in the video, but I can just give you off the top of my head some of the differences here. So with an employee, how they're paid, for one, whether there's taxes withheld from pay. For an employee, there will be taxes withheld. For a contractor, there won't be taxes withheld. That doesn't mean that the contractor isn't responsible for taxes. It's just that they have to take care of that themselves. It's on them to pay those taxes. Benefits was another area. There may be employees generally are eligible for certain benefits, vacation pay, sick pay, health insurance, retirement plans, that sort of thing, whereas independent contractors, again, they have to take care of that stuff themselves. They don't get paid vacation and sick leave and all of that stuff. You had mentioned wages, Jason. So with an employee, they are those wages are negotiated with the employer, whereas with an independent contractor, it may just be set by the independent contractor. You know, if I provide accounting services, bookkeeping services to various businesses, and I say my rate is $80 an hour, take it or leave it. Essentially, they have the right to shop around, but I get to set my price. So that would be an indication. That would be a difference. With wages, if you're an employee, you may have some leeway, you know, depending upon the market conditions. If your particular job is in high demand, you may have some leverage with negotiating, but generally speaking, you're going to be at the mercy of the employer. The employee is going to be at the mercy of the employer, as well as for wages or for increases and bonuses and stuff like that, right? But it comes down to control. Who has the decision-making control over that? So what are some benefits that employees receive that independent contractors typically do not? Kind of touched on that a bit with we talked about the health insurance, paid leave, retirement, that sort of thing. Unless anybody took note of any additional things they said. What legal consequences can employers face if they misclassify a worker? Yeah, there could be fines, absolutely. What's that? Well, that would be the employee, but the employee generally isn't the one that suffers the consequences. Well, they suffer the consequences of misclassification, but they suffer those consequences immediately. But the employer, if it's determined that they have misclassified a worker. What's that?
Intentional.
Yeah. Yes. And there is a difference between intentional misclassification and just ignorance, right? Even with ignorance, you could certainly be fined, but you're probably not going to face, the sanctions are going to be a little bit milder. But there can be legal ramifications. Back wages, exactly. Back wages, back taxes, all of that stuff. Now they've got to go back and make it right.
And they have to start paying for health insurance.
Yep. Exactly. And why is this was the last part, why is understanding employment classification increasingly important in today's economy? Well, for both employers and employees. I mean, the nature of work has changed a lot, especially since in the last 20, 25 years, right? There are a lot more people that are working remotely, right? There are a lot more people that are involved in the gig economy. They've got side hustles going on. So just how work is done changes. It makes it more important to get that distinction, to correctly make the distinction between whether somebody is an independent contractor or an employee, because especially with the remote work, right? So employees a lot of times they may be setting their own schedules. They may be working from home, but they may still be classified as an employee. because of other factors of control that have to be taken into account. It used to be everybody who had a job physically went to that job, right? They physically, they commuted, they went to the job, they stayed there from, 8 a.m. to 5 p.m. or whatever. It was pretty clear cut that they were employees. But now there's a lot more variety with regard to how we're working these days.
That's interesting because, like you said, working from home,
Mhm.
and if they were to be in some sort of accident, I don't know, slip, fall, whatever,
Mm-hmm.
what's their,
Is it considered to be? And I don't know the answer to that. Yeah.
interesting because, obviously if it happens at work, at the actual
Right.
workplace,
Right.
it would be,
So if you're lifting a heavy box at the workplace and you pull out your back, workers' compensation would most likely cover that because it's part of your job duties. But if you're working from home and you're lifting a heavy box, but it's work related, are you still covered? I don't know the answer to that. But it does create a lot of.
I just think that's why it's important, like I was telling you, my husband works construction, so
Mhm.
we make sure they understand that they are independent contractors because they have to provide their own insurance.
Right.
God forbid something were to happen,
Right.
and there is no distinction,
Mm-hmm.
then of course we are liable for
Yep.
whatever happens to that person.
Yep.
So that is why you have to ask for the actual proof of the insurance,
Mm-hmm.
an actual contract stating that that's what.
Mm-hmm. That's their understanding.
Somebody just comes in and like, okay, just do this job, and
Yeah.
something happens.
Right.
So then they're obviously going to sue.
Right. Right. Yeah. You hit the nail on the head there. That's one of the big.
They want it on both sides because
Yep.
of course they want to be protected on them.
Right.
So then we employer, but I do think it's interesting what you said about working from home. I do feel like that's a little bit more.
Yeah, it is. My daughter actually is a good example of that. She and her husband work for a principal, and they've worked there for 5 or 6 years. I can't remember how long. But they started out in person, but then COVID hit, and they became remote workers. And if you know anybody that works for Principal, most of Principal just stayed remote. They didn't go back to the office. And so my daughter they were living in Des Moines, they moved to Michigan because they could still be remote. But so they have their offices set up there. Principal provides their computers and everything. And they're working, they have their set work times that they have to be available. But they're in their own space. So it's just those lines are a lot blurrier these days just because of how we work nowadays. So anyway, so the reason this is important, like I said, at least for our purposes, I mean, it's important for a lot of reasons, but for our purposes, everything that we're going to be talking about in this class, for the most part, pertains to employees. So, yeah.
So let's say you're going over as a car cash.
Mm-hmm.
Your normal car insurance cover that? Technically you're doing business.
Yeah, you probably should have some sort of supplemental insurance that if you're using your personal car, and you're an independent contractor, there very well could be a problem if you're using it for that and you don't have some sort of rider attached to it, to that policy. Yes. Yes, it is. It is. And I tell you what, I had a lot of clients who would come in and they started a business, maybe just even a side hustle, and they couldn't believe all the new regulations that they had to follow. It was very surprising, not to mention the additional taxes that they had to pay, which was, we'll get to that, start talking about that in Chapter 3, the tax part of it. But the FLSA, the Fair Labor Standards Act, which we're going to go into a little bit more detail here, only covers employees. Remember, the Fair Labor Standards Act has 4 components to it. 4 main, that doesn't work. This is my constant struggle, by the way, finding just the right, there we go. So, overtime covers overtime protections, minimum wage, child labor provisions, and then some record keeping requirements. For our purposes, we're going to focus on these two parts of it, but it only applies to employees, and it doesn't even apply to every employee. And we'll talk about what the restrictions are there as well. So what we're going to do in this chapter, let me get to the PowerPoints real quick. Something loud going on in one of the other rooms. These walls are so thin. Oh my goodness. Let's close that. Let's try to download it instead. You'll notice that I'm really, like if you look at my time periods for a lot of these, I'm not very good at estimating how long things are going to take. So just FYI, these are my ideal timelines. Okay, so in chapter 2, this is what we're going to focus on. We're going to talk about the main provisions of the Fair Labor Standards Act. These are our 4 main provisions, but again, we're focusing mostly on overtime and minimum wage. Then we have to define hours worked. So if we're calculating pay, there are 2 pieces, essentially 2 factors there that we have to know. How many hours were worked and have to be paid for, and what is the rate of pay? So the FLSA, if the employee is covered, tells us the minimum, at least, rate of pay. The FLSA also gives us some idea of how we define what a work hour is. And it seems like it would be simple enough, but again, there's a lot of gray area. So for example, what about changing time? What if you have a job where you have to change your clothes in order to prepare for the work, or you've got to clean up after the work? Do you get paid for that time, or don't you get paid for that time? So if it's part of the job duties, yes, you do. So if you're required to do that, if you're changing your clothes because you're going to go to the gym after work, that's a different story, because that would be personal time. You wouldn't have to be paid for that. But we have to define what our hours worked are so that we can figure out the result of that equation of hours worked times our rate of pay equals what our gross pay is. We'll talk about some of the main types of records that are used to collect payroll data, like pay sheets, time clocks, biometric methods of keeping track of what the time that is payable to employees. We're going to calculate regular hours and overtime pay. Again, seems like it would be simple, but there are some nuances to it. There are a couple parts in this chapter, and I recommend that you read the chapter as we're going along. I suspect there are parts of the chapter that you're going to read that you're just not, you're going to be like, I don't understand how this works. We're going to go over those in class, but I want you to kind of get an idea of some of the things we're going to cover, because I don't know if you recall when last week, or maybe it was Monday, we were talking, I said that there are cases where salaried employees actually are entitled to overtime pay. That's one of those calculations that we're gonna work on when we have a case where it's a salaried individual, but they are entitled to overtime pay. So we're going to calculate regular and overtime pay, and then we're going to talk about some other types of compensation plans, because not everybody gets paid by the hour or even on a salary basis. Some people get paid according to how many units they produce, right? Some people get bonuses or are paid on a commission basis. So we're going to talk about those types of compensation plans as well. All right. Fair Labor Standards Act. Who does it apply to? Now, remember, this is, well, let me go through this first. So it applies in 2 different ways to employees. It only applies to employees. So we're assuming now that we've determined that the person is an employee. Now we determine whether or not, as an employee, are they covered by the protections of the Fair Labor Standards Act. And these are the protections that it offers. Okay? There are two types of coverage under this act. If you meet what we call the enterprise coverage requirements, that means that everybody in the entire enterprise is covered. Enterprise could be a company, an organization, a nonprofit, that sort of thing. So that's why they call it an enterprise and not a company or a corporation, because it applies to all different types of employers. So you could meet enterprise coverage requirements, meaning everybody in the enterprise is covered by the protections of the FLSA. Or if you don't meet enterprise coverage, if the organization doesn't meet enterprise coverage, individual employees in the company may be covered under the FLSA, depending upon their duties. Okay, so let's go through a little bit here. In order to get enterprise coverage, in order for an entire enterprise to be covered by in order for the employees of an entire enterprise to be covered by the FLSA, 2 or more of those employees are working somehow in interstate commerce or produce goods for interstate commerce. What does that mean? I think we talked a little bit at one point about interstate. So if your office is in Iowa and you pick up the phone and you make a phone call to a client in Illinois, that's interstate commerce. It's very difficult not to be involved in interstate commerce. Okay, it's pretty, almost everybody these days is involved somehow in interstate commerce. Yep. Mm-hmm.
When you have a phone call, you know how some companies like outsource their customer service overseas. Are those employees or are they?
They're not employees. They wouldn't be employees of the company. No, that would be more like a vendor that they're paying, right? So like if you're paying, think for example, for temporary workers or something like that, and you hire, I don't know, does Kelly Services still exist? You know, places that offer temporary workers, you're actually contracting with a vendor, and that vendor then employs those individuals. Yeah. So 2 or more individuals are working in interstate commerce in the entire enterprise, and the business has at least $500,000 of annual gross sales. So for most enterprises, they're going to be covered because they've got 2 or more workers in interstate commerce. But it does have to be 2 or more. So if it's an individual company, like a sole proprietor, well, a sole proprietor wouldn't be covered anyway because they're independent contractors, right? So those 2 items have to be met. The entire enterprise, 2 or more employees work in interstate commerce or produce goods for interstate commerce, and the business has at least $500,000 of annual gross sales. Now, many nonprofits, because they don't really produce goods for sale and they're not involved in commerce because they're nonprofits, for the most part, it does apply. The annual sales volume doesn't matter for nonprofits. Now, if by chance an enterprise doesn't fit under this enterprise coverage, it is still possible for individual employees in that enterprise to be covered if they fit under the individual employee coverage. If the employee is in a place of employment in a fringe occupation closely related and directly essential to the production of goods for interstate commerce, so maybe you just got 1 employee, so that means up here they're saying 2 or more. Down here they're saying, well, if you only have 1, that 1 individual employee would be covered. So even though the business doesn't meet the enterprise coverage test, it must pay FLSA wages to these workers that are eligible for individual coverage. So you could have an enterprise or a company where most of the company isn't covered, but a few of the employees are covered. It's very rare for that to happen. For the most part, just about all companies are covered under the FLSA. And that means that the employees in that company have the protections, are entitled to overtime pay for hours over 40, and entitled to minimum wage at whatever at least the federal minimum wage level. If the state minimum wage is higher, then they would be entitled to that higher minimum wage.
Why have they not raised the minimum wage?
I can't answer that question.
What are they doing? This is part of the...
Yeah, well, and the minimum wage, yes, the FLSA is an act that was passed by Congress, and it is enforced by the Department of Labor, the U.S. Department of Labor. So it takes an act of Congress to raise the minimum wage. And therein probably lies your problem, because it takes a lot of effort to get Congress to do much of anything. Minimum wage does get raised every now and then. There's no automatic raising of minimum wage because of inflation. It's not indexed for inflation like some other items in the federal code. So that means that every time minimum wage is increased, it has to be passed by Congress. So, all right. So let's talk a little bit about this employer-employee relationship and how we define an employee. So the IRS puts together this 6-factor economic reality test, where they look at all of these factors to determine whether or not somebody is an employee. And if somebody is an employee, then whoever has the control over that work is the employer, right? The nature and degree of the employer's control, the permanency of the worker's relationship with the employer. So is this, like, if you have a contract to only work for, and this in and of itself doesn't mean that somebody's not an employee, but say you've got a contract that says you're going to provide services for the next year. So that example of me being a bookkeeper and providing bookkeeping services, maybe when I get a new client, I have them sign a contract and say, I'm going to provide these services for a calendar year. So here's our time period. That's not a permanent relationship, right? It's temporary. It could be renewed. We might renew it or we might not. Means and instrumentalities of the work. How is the work performed and who controls how that work is performed? The amount of skill, initiative, judgment, or foresight required for the job. Now, again, there are highly technical jobs that require a lot of skill, initiative, judgment, and foresight, where the worker is an employee. Think about medical doctors. Most of them are employees. So that in and of itself is just one of the factors. Risk or benefit of profit or loss, and the degree of integration. So what I want to show you now, well, actually, let's go through this, and then I'll show you the checklist. There are specific rules that apply to employees of corporations, domestic workers, so that would be like housekeepers, nannies, if you're lucky enough, chauffeurs, that sort of thing, cooks, that sort of thing, people who work in the house, interns, partners in partnerships, and what are called statutory employees. Statutory employees, they're kind of a strange hybrid between an independent contractor and an employee. With a statutory employee, they are treated as independent contractors they get to deduct expenses for their work, but the employer actually helps pay for half of their Social Security and Medicare taxes. So it's kind of the best of both worlds that they get, but it's only for direct sellers and real estate agents. Let's see. I want to go back to this list here. And all this stuff is in there under the in-class activities, so you can access it. Let me make it bigger. So this is it's a 20-point checklist for independent contractors. I'll just read through it. So mistakenly classifying an employee as an independent contractor can result in significant fines and penalties. There are 20 factors used by the IRS to determine whether you have enough control over a worker to be classified as an employer. Though these rules are intended only as a guide, the IRS says the importance of each factor depends on the individual circumstances. These factors should be helpful in determining whether you wield enough control to show an employee-employer relationship. If you answer yes to all of the first 4 questions, you're probably an independent contractor relationship. Yes to questions 5 through 20 means your worker is probably an employee. So this would be a handy thing for employers to have and to go through if they're not quite sure whether the person that they're hiring should be classified as an independent contractor or an employee. So, and as it says, so if you answer yes to the first 4, it's probably, let's see, what is it? Yes to the first 4, it's probably an independent contractor. So profit or loss. Can the worker make a profit or suffer a loss as a result of the work, aside from the money earned from the project? So this is involving economic risk, not the risk of not getting paid. So if you are an independent contractor, you have to provide your own supplies and materials and everything. Is it possible that you end up spending more on supplies and material than the money that you actually get from the job? So if the answer is yes to that, or is it possible that you could come out ahead? You could make more, hopefully that's the case. You make more than what you have to spend. If that's the case, that would be checked yes. Investment. Does the worker have an investment in the equipment and the facilities used to do the work? The greater the investment, the more likely an independent contractor status. So again, the equipment and facilities. Are they using bookkeeper example? Am I using my own computer? Am I using my own printer? Am I doing it at my home? The work at my home? Those types of factors. Number 3, works for more than one firm. Does the person work for more than one company at a time? Now, of course, it's possible for employees to work for more than one company. A lot of people have multiple jobs. That's not what this is asking. What it's asking is, are you able to provide these services and do you market them to multiple companies? So as a bookkeeper, maybe I have 5 different companies that I do provide bookkeeping services for, right? And maybe do I actively want to engage in more companies? Am I seeking out more companies to do that work for? Does a person work for more than one company at a time? Tends to indicate independent contractor status, but it's not conclusive since employees can work for more than one employer as well. So that would be different than if I'm a bookkeeper and I work from 8 to 12 at one accounting firm, and then from 1 to 5, I go in the afternoon and I work at a different accounting firm. But I'm going to these different accounting firms and I'm doing the work for them. Then I would be an employee of each of those accounting firms, right? So you can kind of see the distinction there. Are the services offered to the general public? Does the worker offer these services to the public? Am I marketing to other companies? My example of where I wanted to get more business, right? If all 4 of these were checked yes, chances are I'm an independent contractor, not an employee. The rest of them, instructions. Do you have the right to give the worker instructions about when, where, and how to work? This shows control over the worker. So if you've got a boss that's telling you, okay, bookkeeper, you're gonna do the reconciliations for XYZ company this afternoon, and then you're gonna work on the payroll of ABC company tomorrow morning, right? Rather than me as an independent contractor saying, I need to get this done. I need to get the payroll done first. I'm going to do this payroll today. And then I'm going to decide, I'm going to start on this reconciliation and I'll finish it tomorrow, right? Training. Do you train the worker to do the job in a particular way? Independent contractors are generally already trained and you don't have to train them. They have the expertise already. Are the workers' services so important to your business that they have become a necessary part of the business? This may show that the worker is subject to your control if they're necessary to your business. Are the services rendered personally? Must the worker provide the services personally as opposed to delegating tasks to someone else? Now, we're not talking about like a boss-subordinate type of relationship where I'm middle management, my boss tells me to get this reconciliation done, and then I tell my subordinate this needs to be done. Delegating that. That's not what we're talking about. We're talking about, do I hire other people, subcontractors, maybe, to do the work? That would be an independent contractor. Some of the other ones, I'm not going to go through all of them. Work hours. Do you set the worker's hours? Does the employer set the worker's hours, or does the employee? That would be an indication as well. Is the work done on the premises or off the premises? Must the worker give you reports accounting for their actions or their time spent? Expenses. Do you pay the workers business or travel costs? If that's the case, you're probably an employee. Tools and materials. Who provides the tools and materials? So all of these things are factors that go into determining that employer-employee relationship. Here's another one if you still have any confusion. This is just an IRS guide, kind of a brochure that they put together. Ooh, that's really tiny now. Ooh, that's too big. Here they focus on the control, behavioral control, financial control. Remember I said those are the two main types of control. And then the relationship of the parties. So is there a written contract? Is the employer, is the company providing any benefits to the individual? That sort of thing. This is a super important topic. It's a super important topic for companies. For employees as well, or workers, they want to get paid properly. A lot of times what happens if somebody is an independent contractor, they might get paid more than an employee, because when you're an employee, the employer has to pay half of your Social Security and Medicare tax, and oftentimes has to pay for those other types of benefits. They also have the responsibility of withholding income taxes and remitting those income taxes. There's a lot more responsibility that goes along with being an employer than just having somebody, being a company that hires independent contractors. Your only responsibility with the independent contractor is you have to pay them what you told them you're going to pay them. Right? You don't have all those additional responsibilities. You don't have to provide workers' compensation for them. You don't, they're not counted in your unemployment rates as well. So there's a lot more expense for employers to have employees. But for individuals, a lot of times they have greater benefits because they have greater protections. So sometimes there's this push-pull between employers and employees with regard to what that classification is. And this is a highly litigated area of labor law. All right, let's see, what is this? Another link here. So if you're still not quite sure, some more information about making that distinction between an employer and an employee. I'm sorry, an employee and an independent contractor. All right, questions so far? I know that was a lot of information and I went over a lot of stuff in detail there, but the distinction is really important.